Ladies and gentlemen, welcome back to the channel. Rezolve AI is down close to 7% at the time of recording this video. At one point today, for less than a minute, the stock was down about 17% today. And I want to talk about what's going on with Rezolve, what my position looks like in the stock, if I'm nervous about Rezolve, if my thesis has changed, and what the news is today. Now, we're also going to get into your broader market news as well today and some of the headlines coming out because it is a little bit of a weird day, and I want to highlight that for everyone. So hit that like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video if you would like to come join the trading community. But with that said, guys, we have work to do on Rezolve to put today into a little bit of context and to make it make sense in what's happening. Now, I want to say I'm not a financial advisor. I am not a financial planner. I could be wrong. Okay, there's always that chance. But October 1st is the only thing that matters. October 1st is the date in which we're expecting a pretty big guidance raise. Here's the deal in case anyone doesn't know. The company spent 9 years developing the product. Now they have a finished product. And as far as the CEO and his actual words, he says the only thing they're focused on right now is selling this product and executing on that. So they started off this year selling their product. At the beginning of the year, they gave a guidance target for the end of this year at $90 million in ARR. That stands for annual recurring revenue. By about mid-year, they said that they've already achieved $70 million in ARR, that they were on track to achieve well over $100 million in ARR. Well, just with that kind of growth trajectory, logically speaking, $150 million is kind of assumed at this point for where Rezolve could be. Now, the company has said in recent times that growth is accelerating. Okay, they've said that in the last couple of weeks. If growth is accelerating, anywhere from 150 million on the low side to 300-ish million on the high side could be the end of the year target for ARR. Well, there's other things that you should know, like 40% of shares are owned by insiders. Institutions have recently started buying the stock ever since August 17th. Institutional ownership went from about 5% of the shares outstanding to about 10%. About 14% of the shares are owned by private companies, and the rest is owned by retail. So there is a significant amount of the share count that is owned by institutions that, individuals that are likely not selling. So here's the deal. Once October 1st comes around and some serious buying pressure comes into the stock because of the guidance raise that I am expecting, again, could I be wrong? Of course. I think the real upside for this stock comes with 2026 guidance. I don't know if we get that on October 1st. The company might throw around some loose figures. I believe it's going to be like $1 billion in ARR target for 2026 as they are scaling and executing and selling this product. But that's just my speculation. That's when the stock turns into a whole different beast, okay, is next year. But for October 1st, I think there is very strong reason to believe we could see a pretty massive rally. So, do I care about what's happening today? No. In fact, not too long ago, we had a similar situation where Rezolve fell 20% in after hours, literally for no reason. People were like asking questions then, right here. The stock fell from like $7 to $4.50 in after hours for no reason. There was never any news. There was never any reason for this. And again, when people own such a large amount of the stock, you can see this if they sell, right? Because there's not a lot of shares out there. actively trading hands every single day. Okay, you can see that via the low volume the stock has. There's just not a lot of shares out there freely trading. So is it possible that someone sold early this morning and caused the stock to fall? Yeah. It is also possible the stock just started to hit some pretty big stop loss levels and people got, call it squeezed out to the downside of their positions. That is possible. There is no news to correlate this. And I don't care what happens between now and October 1st. Okay, the markets are in kind of a weird place as well today. We'll talk about that a little bit more. But the stock recovered again from that low at about $5.48 back up to $6.28 at the time of recording this video. You're back up to one of the important levels that we'll go ahead and mark that I talked about over this weekend right here. This was a gap up level on September 10th. Okay, you're back up to that level. And even look at that. Look at that candle. Look at that wick. Typically, when you get a big downward wick like that, it's a sign of upside, right, to come. Now, I'm also going to point this out. The RSI recently hit 91, so you were overdue for a bit of a pullback. Now the RSI is at 63. It's basically back to neutral. This gives you room to rally after earnings. The last thing you wanted is the stock to have an RSI of 91 heading into earnings. Because at that point, even with a good guidance number, all things going right, it would be highly unlikely to get a large sustainable rally from that. Now, we are in a very good position to see a rally after October 1st. Now, I'm also going to highlight the option activity from institutions, okay? We have the interesting flow sentiment over here on Ortex. The last trade we had from an institution that was flagged here was a massive one. Last Thursday, you had a February 19th, 2026 $5 call. 14,500 of these were bought at $308 a piece, or $3.08 in option terminology. That is a break even of $8.08 to even break even or make anything on this trade. The stock has to be above $8.08 by February 19, 2026. That's a pretty damn bullish trade. The total dollar amount was $4.5 million. Normally, you don't see trades like that. And then the stock doesn't do well, right? That is someone that is very confident in Rezolve and the upcoming catalyst, which is earnings. Now, you also have 9.61% short interest of free float. You have about 11.37 million shares sold short. Cost to borrow fees anywhere from 54% on the low side to 96% on the high side. Share utilization is at 99.56%. Or 54%. This literally is telling you there is not many shares out there. Okay, so if 80% of the float is not really moving hands all too much, or 70% for that matter, short interest is really a lot higher than 10%. It's really like 30 to 50%. Okay, so you also have this potential buying pressure that could come in to the stock after October 1st. Now, again, I'm not a financial advisor. I'm not a financial planner. I could be wrong, but I just want to show that, like, I believe in what I'm saying. Again, here is my position, at least one of my positions. Current market value, $69,135, up $38,431 on this trade so far, up 125%. Average cost basis $2.80. Invested for 94 days. Current quantity 11,000 shares in this portfolio. Market value $82,000, up $45,000, up 123.56%. Average cost $2.82. 13,000 shares. I do have 15 of these 250 calls expiring February 20th, 2026. Current market value $5,775. Total return 266.67%. Up $4,200. Again, After October 1st, I will probably sell these options just depending on what happens. I'm expecting the stock's going to be $20 to $30 by the end of this year. So that's the first thing that's going to be cut in full transparency. But the shares, honestly, I'm probably going to hold this into next year, this whole position, because I don't think, like, once we get the $1 billion guidance that I'm expecting for next year, which, again, could I be wrong in that? Of course. Maybe it's 500 million. Who knows? Who knows what the ultimate number is going to be? But once we get that guidance for 2026, at some point, either October 1st or early 2026, we should get that guidance, full year guidance. That's when the stock is really going to have its day. And I want to be fully invested in the stock when that happens. That's when the stock goes in between $50 and $100 a share, in my view. Okay. So, yeah, I haven't sold anything. I still have 1,000 shares in Webull as well and 1,300 shares in Thinkorswim. Now, before we get into the broader market news today, the only piece of news we have for Rezolve was posted to the Rezolve X account. This is last week, Rezolve AI participated in NRF Europe alongside our partners Google and Microsoft. We have engaged in valuable discussions with leading retailers regarding the integration of advanced AI technologies to enhance their retail strategies. If we did not have the opportunity to meet during the event, we invite you to connect with us to explore how Rezolve AI can improve your digital strategy with conversational commerce. And they share their website here. As some of you guys have pointed out, Target is now listed on the website as partnered with Rezolve, and that was not the case a couple of weeks ago. So yeah, we're gonna hear a lot coming on October 1st. Like specifically, Target was not here a couple of weeks ago. This is new. Now in the news today, recently confirmed Fed nominee Stephen Moran says Trump has never asked me to pursue a specific policy. Fed Moran says after steep cuts, a little more cutting will take place in 2026 and 2027. So Moran really wants to get rates lower as soon as possible. And today, NVIDIA is said to be making equity investments in OpenAI in stages. Fed Hammock says, I'm not hearing about significant layoffs. Fed Hammock says the risk is persistent inflation could impact expectation. Fed Moran says a series of 50 basis point cuts will recalibrate policy. Fed Hammock says at the moment we're seeing inflation pressure come back in goods and also in services. Jerome Powell just said last week that we don't have much of an inflation problem in services. So Hammock, I don't know what he's talking about. I think it's a girl. I think it's a dude. It might be a girl. I have no idea what they are talking about today. Fed Moran says it's better to move to neutral quickly, but is not panicked about the state of policy. NVIDIA will invest up to $100 billion into OpenAI. Fed Moran says policy is considerably restrictive and a threat to economic momentum. Hammock says if the Fed cuts too quickly, we could start overheating again, which, again, I don't know what delusional world Fed Hammock lives in, but to overheat, you need the consumer to be flushed with money and doing great. And by any metric, they're not. Fed Hammock says, I expect another wave of price pressures early next year. Again, I don't know what's wrong with Fed Hammock, how they have this view. But hey, everyone's open to their, entitled to their opinion. Canada's Prime Minister Carney says the U.S. is shifting to transactional and bilateral trade strategy. Fed Hammock says, I have one of the higher estimates of neutral. We are only modestly restrictive. Hammock says, on the labor side, we're pretty close to our target. Hammock says, it's still a low hiring, low firing job market. Businesses reluctant to hire. Barkin says today, low unemployment and wage gains and stock prices are all upholding consumer spending. Which, again, this economy is not equal right now. Consumer spending is in the top 10% of income earners, 50% of all consumer spending. Like, it's the top earners of this country that are holding the economy up. Fed Barkin says the fog around the economy is beginning to lift, but businesses are still cautious about new investment. It says a tiny amount of tariffs are going to consumers now. Fed Moran says leaving short-term interest rates roughly 2 percentage points too tight risks unnecessary layoffs and greater unemployment. So Fed Moran says they want to lower rates about 2% as soon as possible, or he does. Fed Moran says, I believe that tariffs will lead to substantial swings in net national savings. And Moran says the appropriate federal funds rate is roughly 2 to 2.5%. He says that multiple Trump policies are lowering the neutral rate, and he says that current interest rates are very restrictive. Moran says net zero immigration would suggest 1 percentage point lower rent inflation per year. He says immigration policy-driven reduction in population growth rate also exerts downward pressure on the neutral rate. Trump says that Venezuelan militia training is a very serious threat. Bessent says that 10 Fed chair candidates interviewed by next week. U.S. ambassador to the UN says U.S. and allies will defend every inch of NATO territory. Fed Musaliam says so far retaliation against U.S. tariffs has been almost non-existent compared to what was feared. He says that he expects the impacts of tariffs on inflation to fade after 2 or 3 quarters. And Musaliam says that bankers say that conditions are good right now. A U.S. official says no TikTok valuation has been set yet. Per the Financial Times today, quote, a third of U.S. states may already be in a recession. Fed Musaliam says, I'm open to further rate cuts. Musaliam says he wouldn't support more cuts if inflation risks increase. Fed Bostic says, I see little reason to cut rates further for now. And Fed Bostic has penciled in only 1 rate cut for 2025 per the Wall Street Journal. So you can see a bit of this mixed commentary from Fed officials today. Is having a little bit of a weird impact on markets. Russell 2000 is up 0.20%, NASDAQ up 0.64%, S&P is up 0.40%, the Dow is up 0.12%, but the VIX is up 2.5% today. Bond yields pretty much flat. Oil is down around 0.5%. Gold is up 2%, and cryptos are down quite a bit. Ethereum down 7%, Solana down 8%. Doge down 9%, Bitcoin down 2.5%. So there's a little bit of like a risk off area or theme in some areas of this market. Other areas are doing okay. It's kind of a really weird day. Keep in mind, it is still in the September seasonal weakness for this week. We still don't have a agreement to keep the government open and funded. So that is a risk that will begin to weigh on markets more towards the end of this week. Okay, technically we have this week and then Monday and Tuesday of next week to figure out how to keep the government open. And if there's no progress that starts soon, you know, a government shutdown is going to be here. And normally government shutdowns are not negative, right, for stocks. But when you have reports of the economy on weak footing and the labor market on weak footing and a third of U.S. states already in recession, and then you're talking about a government shutdown, perhaps that could be a negative catalyst, especially in September seasonal weakness. Something we're going to be paying attention to, but is not quite having a big negative impact. Thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day. Check out the link down below in the description of this video if you want to come join the trading community, and I will see you in the next one.